Hey everyone, this is DayTraderRockStar, and I'm doing a playbook video tonight. It's called the Day Trading Radio Playbook video. The playbook videos are videos that describe the setups I look for in the HPS methodology. Typically, when we have the convergence of indicators, they typically converge at certain levels, and they make these repeating patterns. So over time, I've been building up the system and showing you these patterns that play out, doing a focus video on them with a cheat sheet showing you the patterns that are playing out and how to trade them. So this segment today is called the 200 EMA exponential moving average breakdown and lower channel line bounce. And basically, it's a pullback play on a quality name that breaks down through the 200 period moving average. But because there's a 1, 2, 3 pattern underneath us and that trend line comes underneath us, we actually bounce. It's a perfect setup. It's probably one of, I would say, if not the best setup that I look for. It's close to it. One or two of the best setups, and I'm surprised I've taken this long to put it up on a playbook play, because it doesn't show up that often. In a very bullish market, and quality stocks don't usually drop below the 200 period moving average. So we don't see these setups here. But when we do see them, you see a quality stock here. In this case, we're looking at Schlumberger, excuse me, Jesus, Schlumberger, SLB. And in this situation, you're actually seeing the video title up here, Channel Breakout Stochastic Rotation. And what happens is, like I said before, when we do look for the convergence of indicators, they typically show up in the same type of stock, which is a quality name, but in the same type of pattern over and over again. And these patterns are broken down into right now we have about 6 or 7 patterns that we work off of. This is one of the patterns, the channel breakout stochastic rotation. But it also qualifies for that first setup, the setup we're talking about today. So I wanted to actually show you a great example that was already built out for us. And basically, even though this stochastic rotation starts here, we have the breakout here, which is the channel breakout. The first pullback and the stochastic rotating back down to oversold level is usually our buy signal, and that's what that is. But this setup alone really represents what happens before that. It happens as the stock is breaking down through the 200 period moving average. But because we have these 3 pivot areas up here, we're able to draw this these parallel lines in here. This one lower trend line comes down here underneath the 200 period moving average and ends up being the high probability setup zone, or the high probability zone for this type of trade. And it becomes an excellent trade. It's one of the highest, I would say, one of the highest probability setups that I pay attention to. And again, it doesn't happen all the time, because quality stocks tend to hold above the 200 period moving average. And even if they do break down, as you can see here and here, they typically rebound back up to the 200. So you have a lot of things going for you. Again, everything is based off the 200 period moving average. Everything is based off the stochastics here. And as that the main indicator, we want to take that main indicator has to be oversold as that trend line is being touched, and the other criteria is that we're breaking down under the 200 period moving average. So when all 3 things line up right here, that becomes an HPS setup. If there's other things here lining up, maybe there's an underlying trend line. In this case, there wasn't. But there could be other things. The 60-minute chart, we haven't broken down on that. But this is a classic HPS setup, but really a great example of the channel, the 200 EMA breakdown channel bounce. And from that point on, we go into a breakout of the channel and a stochastic rotation. So what I like to do is, follow a group of quality names and continue to follow these stocks. And when they do set up in these scenarios, here's another situation where you had that breakdown 20. You have a pivot area up here, trend line. Here's another exact replication of that setup right here. Breakdown through the 200 period moving average, coming down to a 1, 2, 3 pattern. I can't put that line in here because it's a static chart. It's not something I can put in here. I have to redo the chart, but there is one back here also, and a nice bounce off of that. So what I'm going to do now, that we describe the setup, and I'm going to actually redo this chart for us, and so you can see some of the key components of this setup. Now I'm going to give you examples of that. All right, so let me get this chart fixed for you. All right, so I fixed this chart up a little. It's called the 200 EMA breakdown channel bounce cheat sheet. Again, a 1, 2, 3 pattern as a stock quality name breaks down under the 200 period moving average, you have an underlying channel line that comes down. You want to really take that first trade off of that channel line. In this case, if the channel line and the 200 period moving average come in together, of course you want to take that. That's a bonus. But really here the reaction is just a bounce play, bouncing back up to the 200. Whenever a quality name breaks down under the 200, it tends to pull back really fast into that level. And especially where there's an underlying trend line, that just really adds. And of course, it's important to have the stochastic daily time frame oversold. That's the first criteria there. So we have everything lining up perfectly. It makes up for a fantastic trade. It does not happen all the time, but when it does happen, it happens and it performs really good, 80-85% of the time. One of my favorite go-to stocks. A lot of stocks actually lining up this way, and I want to show you some examples of those right now as part of this video, just to kind of put that into, kind of embed that into your minds and what this setup looks like. So let's bring that into. Let me move this over here. I want to move this over and we'll bring this chart up a little bit bigger. I apologize for doing this the way I'm doing it. This is the way I operate. It really is. All right. So right now, again, if you're in this market, you're looking at Coca-Cola. Now, Coca-Cola was a good example of this. Coca-Cola here made that high. We actually had a push up here. You can make this trend line right here between these two highs. Here's a pivot area. Here's a pivot area. Really makes a 1, 2, 3 pattern. This is enough to satisfy me. So that breakdown here, we came right under like the 200 period moving average. People say, oh, if it breaks down through the 200 period moving, then watch out. But when there's a underlying trend line underneath us, look for that reactionary bounce. It could be here or down here. If it was down here, I'd be sure to see that price come down here and bounce off of it. So when we do have that type of setup, the downward channel, 1, 2, 3 pattern, trend line comes under the 200 period moving average, stochastics are oversold. That is a key level, one of the highest probability setups you can find out there. Here's a couple that are setting up. You can test them yourself. They haven't set up yet. Herschel Brands. It looks pretty good. It's a nice 1, 2, 3 pattern. The 200 period moving average is still above, underneath us. We haven't broken down, but if it does, we're going to be on top of this one. All right. So these are some that could actually, and I'm actually looking for a little better angle on this channel. I'd rather have my channels come down at a steeper angle, not so much as a flat angle here. This is really the key, and I never really measure this out, but this is, if you do it so much, you just get used to looking at certain setups, and those setups work out really well. Philip Morris example, downward channel here. Even in the beginning of here, you might not even see it happening, but you had a couple cool levels here. You had a pivot area here, and a pivot area here, a pivot area here. That's a 1, 2, 3 pattern that happens. You draw that channel line out, you draw this channel line out. The fact is, understanding how the channels work when you have a breakdown, the upper trend lines, and then when your channel breaks down here, you start a new pattern. So you take the low before the breakout, and you can use that as your pivot area. And if you have two pivot areas up here, a lower low, you draw that trend line in, and then you really just take that trade even down here. But because the 200 period moving average was here, 200 was underneath it, oversold stochastics, and the name Philip Morris made this a rock star setup here. So that's a very great setup right there. And you'll see that lots of times come across on similar sectors. An example of that is Verizon, VZ. Here we take a look at Verizon. Now Verizon hasn't set up like this yet, but let's take a look at the possibilities of Verizon. We have a downward channel here, line here, trying to line up. We have a pivot area down here, so we have a kind of a 1, 2, 3 pattern playing out, and we have a kind of a big space down here. Now we're already oversold on the daily, and sometimes if you recognize this level, for myself, I see these levels, I know how good they are. This is an HPS quality name, so I put it on the indicators. I mark this trend line as an alert, and I have that on my system, so that system gets fed into the room when this level comes into play again. So if this price ends up coming down to here, you're going to be alerted to it. I'm going to be alerted to it. We're all going to be alerted. Doesn't mean it's going to work out now, but this is its setup before it happens. To see the setup as it happens, then you take maybe a look at AT&T, and you can actually see here there was that initial high, that breakdown of that channel where you start the initial low. That pivot area coming in here. You touched it back here, 1, 2, 3 pattern. It came down here, close above it. Lots of times you'll see a stock here react early in the morning to break down through a pivot area, but because it's underneath the 200 period moving average, it's coming down to the trend line, and we're oversold here. Quality setup here. We're talking about a nice swing trade, getting at a very low risk, high reward entry zone under the 200 period moving average. Quality name, 1, 2, 3 pattern. It happens over and over again. Even you get that initial bounce, it comes right up against the top of the trend line. You start to cross back over, warning, drops down here. You're starting to actually start to set up again, and we're on top of the stock right now, but this is a great setup in itself because you have a pivot area here. Once you have those two, and it already reacts off of that level, you're following all the way to, until it stops working. So this was a really good area for a bounce because of the combination. You have the lower trend line, you have the upper trend line. X marks the spot. It's called the X marks the spot type of trade. I'm going to need to do a cheat sheet on that. But whenever you have an upper trend line and a downward wedge pattern or a lower trend line coming in and Xing it out, that area around that becomes a HPS zone. And when it lines up with an oversold stochastic, there is no doubt about it. You can see the results from it. Very simple. Again, the question is, are you going to be on top of these stocks when they happen? That's what my job is. To make sure you're on top of it. That's what the platform is about. Platform is about, kind of making sure that you see what's happening as it's happening. Today, Kraft, KRFT, gave us a great signal. Might not be a setup that we're talking about today, but, what we do talk about is those important levels, those trend lines. And, we got the alert in the room off the HPS alerts off of this trend line, and look at the bounce we had on this. I mean, we got alerted to it right here, right around that 54, 70 area. It was oversold. Look at the bounce. It went up 70 cents off of that bounce, and that now we're pulled back 5 minutes. This tremendous setup here on a great flag. Nowhere near the 200 period moving average. Doesn't fall into that, but just again, the job is to identify these setups when they come into play, and that's why this 200 period moving average stochastic breakdown. The 200 period moving average breakdown stochastic channel line bounce. Sorry, it's a late night. 10 o'clock now. And that underlying trend line here coming into play. So again, you can see the example here. You had a textbook 1, 2, 3 pattern. And you can see that you can actually draw this trend line up to this level here. And it's a little bit better, but once that channel line came down to this zone here underneath that 200 period moving average, you can pretty much recognize this pattern here. Whenever there's a gap, also remember when there's a gap, it starts a whole new pattern. So we always pay attention to gaps. I like to start those trend lines at those gaps. I put a lot of into that, and you can see how it came down here, especially that it's that trend line lined up right underneath that 200 period moving average. It was oversold here. It was a classic example of a 200 EMA breakdown channel bounce. So again, that one, and the list goes on, and that's what we're looking for, and that's how we got here. And this is the cheat sheet for it. So I hope you enjoyed. This will be on the forum. You could download it, put it in your notebooks, or wait for the book to come out. It's up to you. I'm DayTraderRockStar. We'll catch you on the next Playbook play.